Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at oil and whether or not we may start to see this commodity fall away soon. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we are Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. The cost of living in Australia has risen considerably over the last 2 years, with several waves of COVID causing widespread lockdowns, supply chain issues and delays. Now this has seen demand outstrip supply, causing costs to soar and prices to rise. Now one area that has been hit hardest is the energy cost, with petrol and the cost of filling up your car rising to unprecedented levels. As we know, the price of fuel is linked to oil prices, so the question that needs to be answered is, will oil prices rise or fall into Christmas and indeed into the new year? Now, at the risk of being a two-handed economist, I don't believe oil prices will rise, but I also don't believe they will fall very much. Most experts are predicting oil to be around $80 a barrel in 2022, which is where it's at right now. Now, the challenge with being more precise about what will happen is the unpredictability of COVID, with more lockdowns expected around the world, which could see the supply outstrip demand, as oil producers just can't turn on and off the tap like we do in the garden. If this occurs, prices will fall. That said, if things settle and demand increases, we will see prices stay high for a while longer while oil producers ramp up supply. The news is not all that bad, as the charts show that the price of oil should fall for a short period early to mid-2022, which could see oil back below $70 a barrel and possibly as low as $50 a barrel. However, there are a lot of variables, and as such we are in unprecedented times. Anything could occur that would affect this. Now, due to issues around the world at present, the energy sector has not done well in 2021, although I do expect it will do much better into 2022. That said, I don't expect the opportunities will come from oil companies. Now it's time we investigate the market, and we'll start with what were the best and worst performing sectors last week. Now the best performing sectors included utilities, which was up 2.04%, followed by materials, that was up 1.68%, and consumer staples, that was down 0.59%. Now the worst performing sectors included information technology, down 6.04%, followed by financials, down 3.61%, and energy, that was down 3.02%. The best performers in the S&P ASX Top 100 stocks included Fortescue Metals, and that was up 11.12%, followed by APA Group, that was up 5.47%, and Mineral Resources was up 5.20%. The worst performing stocks included AMP, which was down 11.89%, followed by WiseTech Global, down 9.85%, and Qantas, that was down 8.76% last week. So, what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, last week was an interesting time on our market. Obviously, Friday saw our market take a bit of a dive with all the news of this new strain of COVID in Africa. Now, it is quite interesting to me that it just doesn't happen on one day. They would have been watching this for weeks. But we'll have a look at the charts anyway, just to let us know what is actually happening on our marketplace. Because I know there's a lot of YouTube videos out there, of, especially in America, with people predicting stock market crashes, etc., etc. So let's have a look at it and see whether that's possible for our market. Now, before you panic or anything, my first thinking is no, our stock market will not be crashing, but hey, you just don't know. I mean, our market did melt down with COVID, or the first version of COVID back early last year, which we saw that move down into March. So you can't say it just definitely won't, but right now the charts are not telling me that it will fall away. Like last year, I was expecting a bit of a pullback. I'm expecting a little bit of a pullback now, but I just don't think it's going to crash. But let's go and have a look at the charts to see what they tell us. Now, on your screen is normal. On the left is a monthly chart. On the right is a weekly weekly chart. Now I'm just going to bring up the monthly chart for a little bit, and you can see here the angle, and this is what I talk about all the time is momentum, and the momentum on our markets has been slowing for a number of months. You can see here that angle going from about from about June, our markets really sort of slowed down. So that was that high there in August, and we've really slowed down through there, but you can see the angle that we've had in past periods where the angle of the trend there, and if you see the angle of this current trend, you can see how much steeper it is since that COVID low. Now what's normal for our market, if I keep dragging this back, you'll see it's pretty similar onto that little run up there, this is the GFC low back down into March 2009. You can see even there, out of the March 2009, it did, if I can grab it, there we go, you can see it did run at a very fast pace for a period of time, then it slowed right down. But this period of time was 1, 2, 3, 4, 5, 6, 7, 8 months, 9, 10 months. Even if you count these, we're up to 13 months. We're way past 13 months on this one, aren't we, in this little run? So it was overdue for a bit of a slowdown. That's why I was talking about mid this year, saying our market should start to fall down and come down into a little bit more of a sustainable or a move downward, which would give us much more sustainable move upwards. But we just didn't do it. It kept moving up. But let's go and have a look at the weekly chart, because at the moment we're seeing this weakness or this indecision. And on the weekly chart, if we look through here, you can see this big sideways move, really sort of all this last sort of 4 months, 5 months through here, a massive sideways move. Now this is last week here that we can see that it opened at 7729, closed at 7599, and it was a 167 point range, that whole move down. And if we go down onto the daily chart, you can see pretty much most of it was on that Friday there, 153 point move on Friday. Now here was, there's Tuesday, so Monday we went down. We made a lower low than the prior week. Tuesday went up, Wednesday went up, Thursday was closed higher, well, Wednesday closed lower, and Friday down. Now this is what really is interesting. Now this current strain, however you say it, it's got an interesting name, hasn't it? It's just not Delta, but this new strain, you can't tell me it's just happened on the world on Friday. The world would have been watching this new strain, or this new strain throughout Africa for quite a number of weeks, if not longer than that, simply because it just doesn't pop up right across a country in a matter of days. So they would have been watching this. So this may have been causing this sort of sideways move over the past month or 2 months through here, because the world might have been watching, or the big end of town might have been watching to see whether it got worse and whether that might stop production, or it might result in widespread lockdowns across the world and obviously stop the world again like COVID-1 did back in March last year. But at this point in time, I'm not really seeing enough on our market to suggest it will crash. Now, the interesting thing on our market, if you look at this period of time through here, you can see this is how volatile the market's been and the indecisiveness our market's been. There's a 1.89% move in those few days. Well, it's a bit longer, a bit more than that. There's a if I get that onto the right thing and move it up there. No, it's not going to work. I'll do it again. A 2.1% move up. If I do the next one, you can see from that high to that low, another 1.9% move down. Then we've got another 2.12% move up. Then we had a move down about 1.76%. Then this is the shortest move. This is still on a daily chart, it's a 1% move up. But quite recently, which is the last few days of last week, it's 2% from that high there. You can see a lot of big moves on our market over a number of days. Now, if I just put this one onto this one, you can see the real figure there, 1.9. So down 1.9, 1.9, 1.7, and now 2.16, where the move's up 2.14, 2.12. But our market, if we go back through to here, our market really is, so if I put it on here, so that's the 15th of October there on that bar. Currently we're below that. So if we have to go right back to sort of mid-October to get the prices where it did close at, or was closing at and traded at on Friday. So this is the volatility our market has been seeing. There's some pretty nice moves over a number of days. Now if I look at these moves, you can see this is 1, 2, 3 days down, 1, 2, 3, 4, 5 days up, 1, 2, 3, 4 days down, 1, 2 days up, 1, 2, 3, 4, 5 days down to this point, 2 days up, 2 days down. So it's not a lot of days in this whole period of time, but you can see here how volatile the market is. So if you've been struggling with your investing and trading over this time, this is the reason why. Now let's go back to the weekly chart. I'm just going to delete all of those things so they don't mess up my chart there. Let me just hide all of that so you can see the chart there. So looking at this, we've now seen the market from this high back in August. If I go right to that high, you can see there it was down 5.71%. Currently it's sitting at 3.7%. So if this does, at this point in time through here, I was expecting at least an 8% move down, but it didn't actually do that. And I was thinking 8 to 12%, which is still quite possible. And if we look at this, if we go and put my tool on, if it goes down 8%, then we're looking at about 7,200 odd points. If we're looking at around 12%, we're looking at, where is it? Let me get it, about 6,900, nearly 7,000 points there. Look, I don't think it's going to go that far, but it could go down into that far. As I said, it is rolling over. If we still get a down week down this week, I'm not surprised. We might get 1 or 2 weeks down. The kicker will be this one. This low here at 7,446.5 points. If we do break that, then you're likely to see it go down below 7,2, between 7,2 and 7,000 points over the coming week. So December may not be a good month, but if that happens, then I would expect the market to move up into January, February. And I'm not expecting a market to crash. I just think it's got to slow down a little bit. And if I use my little trend line tool and we just draw across through here, you can see here this line here that I've drawn just on the basic momentum of the market. It comes back down to this. That's around that 7,200 points to 7,000 points. So it may just come back to this momentum. But that said, as I said a minute ago, anything is really, really possible on the market, because when you get something like a pandemic and you get the world shutting down and governments putting people into lockdown and things don't move, you get these economic things that happen. It's not a normal type of market situation where you just have an economy speed up and slow down over a course of period of time, which cause normal market crashes. Market crashes are generally they are caused by over borrowing and over leveraging, and that's what causes them to melt down. But right now we're not getting that situation, and so whilst Australia is coming out of it, we're faring economically reasonably well. The US is not looking too bad on economically as well, so we're starting to open up again. But again, if we do start to lock down again and there's mass lockdowns across the world, then we might see the market pull back and crash. But geez, I don't think it's going to do it. But again, we could be wrong. So you just need to protect yourself. Now's not the time to buy dips. I know a lot of people out there watching these videos go and buy dips. This is not the time to buy dips. This is not the time to dollar cost average. This is not the time to try and pick up cheap stocks. Okay, we just need to make sure that what's going on in the world at the moment is not going to adversely affect the market. And we'll know in the next week or two if it's going to really adversely affect the market, because it will come down. But make sure you've got your stop losses on, because you're not using stop losses, you will get caught in any downward move. But as I said, right now, my gut's telling me, the charts aren't telling me that we're going to crash. There's a lot of things telling me we're not going to crash. I'm expecting the markets, to both the US and Australian markets, to move down into bigger moves down into probably 2023, 2024. I'm not expecting it in this next 12 to 18 months. I would expect our market to make a new peak or a new all-time high through into 2022, possibly into 2023, but then come down into a bigger move into 2023, 2024, and maybe a little bit longer. But right now, as I said, I don't think the market's going to crash. But let's go into your questions for me for this week. Now, before we get into our first question, let me say that this channel is really a safe place for everyone to ask their questions and get qualified answers or quality answers, if that makes sense. Now, we do not allow derogatory comments at all in this forum, in our comment section below. And in fact, we delete them, along with deleting anyone who posts comments about stocks or answering other person's questions that are, in our opinion, are giving advice or trying to ramp up a stock price. So you feel safe when you start posting on our chat forum thing, or the chat down below. It's really there for you to ask us questions and have experts, or us as the experts, answer your questions. It's not really for other people to give their personal opinion on stocks, etc. like that. But we're happy to answer any questions that you do have. But again, if you are somebody who just likes to post negative stuff, then please, you may as well go somewhere else. This is not the channel for you. But the first question we do have today is from Harry He says, hi Dale, can you share your view on Greenland Minerals Limited? So let's go into the charts and have a look at Greenland Minerals for Harry. So on the left, monthly chart, on the right is your weekly chart. Quite a volatile stock, and you can see this is the history of this stock right back from there back in 2011. It's been in this big long sort of basing pattern through here from 2015. Definitely more of a trading stock rather than the buy and hold stock, but if you look at this, it can range pretty well. You can see, oh, I've just used the wrong tool. Let me delete that. Where are you there? So you can see it can move very, very big. There's 828% move there on that one, but it can do the opposite as well. So you can see the big move down 80% there. Look, I don't like this stock at all. I think you've got to be really good at trading to have a stock like this in your portfolio right down there smooth at the moment. That said, you know, it's probably unlikely to go below the low of that there, which is about 2 cents. Right now it's sitting at around 8 cents. It's, you know, we're talking about, it's not a big liquid stock. It's not one I would personally trade myself, but you do need to have really solid rules on this. You can see, look at the chart. That says to me that it's relatively an illiquid type of stock, but I'm not sure why you want to trade it. Hopefully it's got good fundamentals, but at this point in time it doesn't look like it's got good fundamentals. Again, don't bottom pick because you might see it fall below that low there at around 0.6 or around 6 cents is that low through there. So if it does go through that, it's probably likely to go right down to this sort of down to 5 cents or even a little bit lower than that. But again, you need to have good solid entry and exit rules on this. This is not a buy and hold stock because, you know, you could have bought it back there in 2017 at 12 cents and you'd be sitting on a loss right now and holding it all this period of time. So again, if you're a good trader, then I don't have a problem with that. If you've got really good sensitive, what I mean by sensitive rules here is rules that trigger pretty quickly to get you in and out of it. If you don't have rules like that, this one is really, really hit and miss for people, especially, it's not about whether the price is, and all too often I find people buy stocks that might be 5 and 6 and 7 cents thinking they're cheap stocks to buy, and because as you saw, you can make a lot of money if you hang on to them long enough and you get them at the right time. But what generally happens is people buy them at the wrong time and then they get stuck in a stock that's falling away or going sideways or doing nothing because they don't know where to get out. And that's the real critical thing. If you don't know where to get out, then you shouldn't be getting into a stock, because if you watch our live show each week, it's constantly we get people saying, I bought this stock and it's falling away, what do I do? Now, to me, if you buy a stock and you don't know when you're going to sell it or how you're going to sell it or your plan around selling it, then you're taking higher risk than you really do need to, when finding out the answers to do that are so simple. Understanding how to exit a stock is really, really simple, and that's where I teach in my books, using stop losses and other exit strategies. So please go and have a look at that. If you haven't bought my book, go and grab it, because it really will help you out. And that's why good traders know how to exit. Good traders know how to do their money management, and good traders are risk managers. They're not just they're just not people that buy stocks, if that makes sense. And we spend an inordinate amount of time trying to find stocks to buy, but we spend very little time, or most people spend very little time on managing the stocks they have and understanding how to exit them, whereas the trader does the opposite. They understand how to manage their portfolio, they understand how to manage the stocks that they have, and they understand when they need to be getting out or looking at high risk areas where they may need to get out. So as I said, these sorts of stocks that we've just looked at, not sort of the ones you should be looking at unless you're highly skilled. The next question we have is from James Bond. He's back and he says, hi Dale and team, awesome show. Can you please share your thoughts on Bubs Australia? Looks like it broke a down trend line. Appreciate your help. Thank you. So let's go and have a look at that for James. And it is, I haven't looked at Bubs for quite a while actually. It's been months since I've looked at Bubs. Not a fantastic stock, or hasn't been over more recent times. It was a bit of a darling for a while and it went very, very well up into, you can see that move up into 2019, but it's been quite bearish and there's another few false starts. So we did have people last year when it did this move up saying, you know, is Bubs the time to buy? And we kept saying, no, it's not really the time to buy. But you can see that move up was 197%. So you would have had to get in and get out of it pretty quickly, because that move has 2 months That's all it was. And then if you'd bought in, most of the people would have bought in probably up around here. But you can see since then down to that low, it's fallen 73.5%. Looking better at the moment because it's found a bit more support with that low there. It's at 33 cents. That one there's a little bit lower at 31 cents. So it looks like it's found a little bit of support. But you can see it's not a highly liquid stock. This month is obviously November. It's tried to push up and come right back down again. So it's not really wanting to really take off and go into a new uptrend. There's still a little bit of uncertainty on this stock, but geez, one big move up there in October there was a big move, a 20-cent range on a stock that was around 40 cents. So that's a big move through there, but it's not really telling me enough to say, yes, I do like it. Has it crossed a trend line? That's a question you've basically said. It did cross a trend line way back through here. Yes, it did, and it could have given you a trend line entry, but it's only one entry rule. We always use a confluence of rules where we have multiple rules to actually come to a decision that this makes this a solid buy. Right now, would I buy this stock, or I look to buy this stock if it really traded above these sorts of high? Look, it's not the sort of stock that I like to trade too much, simply because it does run a little bit more on news and it's a little bit more illiquid. But if it went above that 61, 62 cent mark in the next week or two, I could look at it for a good short-term trade, but not 100% sure of the long-term move on it because it doesn't look super strong at the moment, but it does look like it's got support around that sort of 30 to 34 cent range through there. So just be a bit careful. You don't want to be catching a falling knife with another false start, but this is the first time it's really sort of moved in a better way than it has all the way through here. You can see it's just been quite bearish through there. So just be a little bit careful, James. But look, I don't necessarily think it's a bad decision or bad stock. I do like the stock. I just think it needs to be probably a little, how do I say it, attacked with a little bit of caution. That's all I'm suggesting, just a little bit of caution, and make sure you've got a good stop loss underneath it. If you're not going to use a stop loss, then I wouldn't trade this stock, if that makes sense. Next question we have is from Tony, who says, "Hi Dale, thanks for the great channel. I have PME on my watch list, or Pro Medicus. It seems to be an excellent stock, and I'm wondering if now is a good time to buy, or if it's too late or too expensive. I would be looking at holding it for the short to medium term." Okay, so let's go and have a look at this stock. So I'll just bring up the chart there. So you can see Pro Medicus there. It's been on a beautiful, big move up. Currently looking at November, looking at a strong, really strong bar in November there. It's closing there at that $61 odd mark. So nice looking stock. One of the things you can tell is looking at how far it's really traveled. And one of the things I always use is just basic trendline tools, and just look at the momentum this stock has had, just to see whether it might be going too far. And you can see how the angle just keeps changing. It's just getting steeper and steeper and steeper. So generally what happens when I'm saying, looking at this, I've got 1, 2, 3, this is 4 trend lines. This is telling me, and now it's going to do this. So to me, it's going to do 5. I've never seen any more than 5. I never have, in terms of 5 really angle changes, and this is how quick I do it. I don't really spend a lot of time on this because it's just roughly what the angle is and the momentum is. This tells me that the end is near. It's not telling me it's not going to go above that high there of $70. It's just you're getting in at the last end. So is it too expensive? That's something that you need to work out for yourself, whether it's too expensive. Will it go through that point? Possibly. It'll probably go through 70. How far will it go past that? I don't know. I need to do a bit of work on it before I'd work out how far it might likely to go. But it's far easier, far safer to get in on when it's doing this. So if you had 1, 2, 3, and this is the 4th one, that's the safer one to get in. The 3rd one's really safe to get in on because you know it's got longer to move. But the last one, this is always fraught with danger, and a lot of people do this. They tend to, if I use my little trend line tool, trend arrow tool, what you see is people, they get in, and then they see this happening on the other end of it. Now they might get in through here, and this could be the 5th one, and they're getting in and only having to get out on the downward side because there's not much left of that. The steeper these moves get, that means the more and more, how do I say it? the professionals aren't getting in there. That's where the amateurs are getting in, and they run out of money a lot quicker than the professionals. The professionals are getting in earlier, and the traders are getting in earlier. The others are getting in later. I'm not trying to say anything about you personally, but I'm just saying your choice. Is it too expensive for you? Is it going to go through that all-time high? Probably. It probably will if it goes up from here. And I do like it at the moment, but how long is it going to go? So short to medium term, okay. Possibly more short term maybe than medium term. Definitely not long term. This is not going to keep going up for 12 months, or sorry, 2 years or 3 years or 4 years. It's not going to do that. So it might be 3 months, might be 6 months, maybe a bit longer, but always be ready to exit it. That's really what I'm suggesting on this stock. But good look. It does look a good stock, and I wish you well, and as long as you've done your research on it, I don't have any issues with it. Now we've got a question from Chris, who says, can you quickly explain volatility and liquidity, what they mean for trading? When I saw that question, Chris, I went, wow, how do I answer that in a minute on a video, or 1 or 2 minutes on the video? Because it's like, you ever had a jigsaw puzzle and you got a box and you open it up and there's this big bag inside it, big plastic bag with 5,000 or 10,000 pieces in that. What we're talking about is one piece of that whole puzzle. And that's what trading's about. And talking about liquidity and volatility in that context is, I can give you, volatility is just how far a market or a stock will trade, or what's the likelihood of it trading. So for example, let's say BHP, his average volatility might be moving 1% on a day is pretty simple for that, easy for that. But volatility ebbs and flows all the time. Sometimes it's higher for a stock and sometimes it's lower for a stock. So BHP may be trading over a period of time, might move up 2% at a particular time for a period of time because its volatility is increased, or downward. So you've got volatility on the downside can be also higher than on the upside because people panic faster than they actually get greedy. So volatility would change. Liquidity is completely different. So volatility is about how fast something travels in a period of time. And I'm trying to keep this really, really simple for you. Volume is a little bit different. Liquidity is a little bit different because it's about volume of shares traded and how many people are trading it. And a lot of people don't understand that. They just look at volume on a stock. They go, wow, this is really liquid. No, the amount of shares traded on a stock does not necessarily constitute liquidity. I could have a stock like some of the stocks we've seen, and let's say one of the stocks we've seen trades at 1 million shares a day. And people go, wow, that's 1 million shares a day. The next stock might be 10 million shares in a day, and they go, wow, that's far more liquid than the 1 million shares that traded. Maybe not, because that 10 million shares traded in a day could be one person buying and one person selling. So is that liquid? Whereas the other one that's had 1 million shares traded in the day might have 1 million people trading those 1 million shares. They've all bought and sold, or bought or sold one share, or 500,000 bought and 500,000 people sold one share. Could be like that. So what is liquid? Or what is liquidity? And it's really about participation in not just volume. So you've got to match the two, and then you've got to look at price on top of that, to what is price doing with the liquidity that you're actually getting, and also the volatility. So you start adding in all sorts of things. So one doesn't necessarily make understanding volume doesn't necessarily make you a trader. So understanding volatility and liquidity is really important for a trader, because you want to know that you're buying stock. Volatility is where you make money. If something's not volatile, it's harder to make money because you're not getting bigger movements in price. So by me just telling you a little bit, it can be really, really dangerous. And this is why I find a lot of people on YouTube are really seriously poor traders, because they have really bad rules. Because they'll take a piece of a jigsaw puzzle from a video and think that's going to work in every situation, which doesn't. It's CRAP. You've got one piece of a puzzle that could be 5,000 pieces, and you don't even necessarily know the picture yet. So as an educator, I've got to be really careful about what I say and how I show things to you, because it can take people take it out of context all the time, and there's nothing more than this YouTube channel has taught me that. I mean, I've been teaching traders for 25 years or something, and this YouTube channel constantly I see people in comment section that take what I'm saying out of context to what I've actually meant, because it's their knowledge and experience based on just watching YouTube videos. And you know, people say to me, well, you're teaching people to do trend lines on stocks on these YouTube videos. No, I'm not. I've got six rules on trend lines. I haven't mentioned one rule on our YouTube channel, because starting to mention rules on how to do that will start teaching people. They'll get it out of context. You really do need to learn it in the right way, and liquidity and volume and volatility is really a big chunk of learning. It's not just something it can happen in 1 or 2 minutes. So hopefully my high level has helped you a little bit, but I suspect it probably won't help you, as I said. But as a trader, I'm looking for volatility and liquidity in whatever I'm trading, because that makes it safer, drops my risk, and it also increases my ability to profit. But thank you for asking the question, and thank you for everybody for sending in your questions. As so often happens, we just can't answer everybody's questions on this show. Now, if you do have a question, then the best way to have your questions answered is to publicly subscribe to our channel. Now, we know who they are, as they have a little red circle with a little play button next to their name. So when you see their name and there's a little red circle and a little play button next to their name, you know they're publicly subscribed. And that's the easiest way for us to know that they're subscribers who support our channel. And by that, we'll actually support them by answering their questions. So once you're publicly subscribed, then type your question below into the comments section. Now, remember that here on this channel, we do these Monday market reports each and every week. We also do our live stream every Tuesday night, 7 to 8 p.m. Australian Eastern Time. So I'll see you there on Tuesday night. Remember to hit that subscribe button now and click the bell on the right of it so you know when we upload and go live. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.